All right, so I'm just going to go over the crude and just the trends that have made themselves available. So we'll first start with the uptrend and then go over the downtrend. So the market was going down, 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 down. Over here, it seemed quite climactic right over here. So this is crude, by the way. So here, you had a lot of volume, big price action. Then you had this, oh, there was some demand coming in, some preliminary demand, but not enough to change trend. So a lot of times you'll have these demand signals, but it just means that it could be the, covering, or it could be taking a position, or it could be just, in this case, it's just preliminary demand. So why? Because this is where they're accumulating. This whole box right here is accumulation. Possibly here was the first attempt. Anyway, who cares? Over here, it climaxed. Demand came in. And what time is it? It's about 11:13. Okay, so then they bought some more here. But what really catches your attention is when there's a big move and there's demand and confirmation. So that's telling you trends are changing. Like you need some breakouts, some sideways cause, and then a break. So in this situation here, you have demand, but it's not that much because it's undergoing accumulation. So it does it again, then finally did the spring, and then you had, the demand, the heavy demand come in with a nice breakout here and a nice breakout there. So and it confirmed because there's demand in the background, etc., etc. And what's really nice is that there was a spring, which beneath these levels, which basically got tested here, and then demand came in. So this is saying, giving a really good story. The other thing I want to say is look at all this red, 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 and then you have all of this red, all of this volume here. And what happens afterwards? A spring, a test, and the market goes the other way. So, I mean, this is saying that this must have been climactic, right? So first, and it's tough to identify sometimes because over here it looks like a climax, but then more volume comes here, so you say, okay, this is a climax. And then if more volume comes later on in a lower low, you said this is a climax. But you don't really know until the reversals happen to help confirm the climactic behavior, because that's what a sinus trend or change of behavior, that's what it does. It helps confirm the climax. In the schematic, it says, climax and automatic rally or technical rally. That technical rally is the change of behavior. Hence the word rally, because after the climax, we'll typically get a change of behavior, or you could call it technical automatic rally. It doesn't really matter. The point is, it's a big move. All right, so you have a climax down followed by a big move up, and you call that a automatic or technical, whatever. Doesn't really matter. I just call it demand. And here this is it right here. The volume is good. It's not the highest, but the price action reveals that it's the biggest wave in a lot of waves. So, I mean, the market is advertising that it's going to go higher right there. After that, you had some selling, but nothing really. And what's important to note is this behavior right here, right there. Climax goes lower on less volume, and then the testing process is finished. So high to low. That high to low followed by that rally, that's really important, because it's telling you that supply is spent. All right, climax, yeah, change of behavior, but before that change of behavior, a lot of times you have testing, and this is the testing. It could also be interpreted as a climax spring secondary test, It could also be interpreted as climax, shortening of the thrust, a test, and sign of strength or change of behavior or whatever. But the idea is it's holding around the lows and goes the other way. And then finally it comes back to test and goes higher. And as it goes higher, so before I go any further, this right here, this rally with these breakouts, with that in the background, all the cause, is what should make you think bullish. Why? Because you have a climax, because you have the testing, you have a spring, you have its secondary test, you have demand, high volume on the up waves, and you have a follow through higher high that takes out 1, 2, 3, 4 highs, telling you what? It's a breakout as well with follow through. So for those reasons, and obviously, you know, on the down waves, the volume shrinking like that, you know, these are all bullish indications. And like when you piecemealing them together in your mind, this tells you that, you know, the probability or there's a directional change. Anyway, so now it goes down, tests, and if you have your stop right here, I think, I'm not sure if it got taken out, but let's see, the low here is 75, the low here is 73. Yeah, this is a shakeout of this, because a lot of folks, when they see this rally, they're going to buy on the pullback and put their stop here instead of the prior low, the lower low. So this goes down exactly 2 ticks lower than the prior low. Now tell me, do you think that that's coincidental? Obviously not. This is a targeted move to take out the stops, spring the stops, and then go higher. So putting stop placement is extremely key. Anyway, so this is a shakeout or another spring of the low, of the sign of strength low or whatever low, and then the market goes up. As it goes up, ding, 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 all of a sudden, you take a look at the volume signature and see what's going on here. It starts to increase. When it increases, does that mean that it's a climax? No, it could just be buying. You don't know until, like I explained, the secondary test or shortening of the thrust or up thrust, followed by selling waves, etc., etc., change in trend. So all of that together should put the picture together. Otherwise, no one can say that a high volume wave on top of a trend is bearish, because even if a lot of climaxes, what they do is they just pause a trend for reaccumulation and continuation, in this case to the upside. So climaxes can just pause. They don't necessarily need to end a trend. And also, you don't know if a climax is a climax until a sequence of behaviors proves it. So anyway, long story short, this wasn't the climax. Here you see even more volume. And how do you know this is the climax is what I'm going to go over now. You have that climax and you see the selling on the way down. It increases. This is bigger than 1, 2, 3, 4, at least 4 waves. This is that automatic rally, or that whatever change of behavior, or that sign of weakness, or whatever you want to call it. This here, because after the climax you had that behavior. Does that mean that the market is going to go down now, that the trend has changed? It doesn't. No, because a lot of times, again, you have other things that could be happening. It could just be selling off of the high and for a resumption and reaccumulation higher. So you don't know that until the trend breaks with heavy supply. But it's a clue, and that clue, you need more clues so you can piecemeal the whole story, not just, you know, red crosses green, a signal or some shit like that. That's just not going to work. It's like multiple things will help you, you know. Anyway, where was I? Over here, you have that high volume at the top of the trend. Okay, and now selling comes in. Again, the low is not broken. It just comes back to test. Later on, you find out in hindsight that yes, this was selling, and a change in behavior. But right now, you don't know. It's just selling after the climax, and it could be a couple of things. So then after that, what's interesting now is this wave here. Look at that wave. Look at this. It went from 241 to 25. What the hell happened here? It went from 241 to 25. Almost 1/10 of the volume. That is meaningful. See, over here, right, over here on the selling climax, you went from 399 to 218, and then when it tested again, it went to 83. So it's eventually goes down to about 83, which is about less than 1/4 of 399. So about 25%. Here, this thing is 25, almost 1/10 of the volume. That's your test. That's your test that demand is not there. This test is a test telling you demand is not there, just like this test is a test telling you supply is not there, or it has diminished considerably. And what happens afterwards? This move. Here, it's a secondary whatever test, and tells you demand is not there because it goes down from 241 to 25. It's done. All right. So demand is spent. Supply is there on 226. Demand isn't. And here you have only 27. This is actually really important. From a price perspective, this is very small wave from a price perspective. From a volume perspective, this wave, which is 4 times bigger than the prior wave, is from a volume perspective is weak. From a price perspective, this is weak. Both of them, in my opinion, are indicators of demand weakening. So once you have a climax, obviously you look for what? Weakness, meaning confirmation that the climax was a climax, and that weakness comes in the form of price and or volume. Here, it's volume. Why? Because it went from 241 to 25. Here, it's price. Why? Because it's only one brick. Again, here, the climax. Over here in terms of volume. Why? Because it went from 399 to 833. Here, you have both the price and the volume indications. I think that's about it. And then finally, market's had enough and it cracks and makes a lower low. And it does so with heavy supply. That supply is really important. Why? Again, you have cause in the background. Look at how many lows it takes out. That takes out 1 wave, 2 wave, 3 wave, 4, 5, 6. This whole block right here is distribution. And the whole thing is taken out. But more importantly, why is this important is not just because there's a bunch of waves and there's a breakdown. It's what went on in those waves. It's what went on in this area, what went on in this range. You had a climax, helped confirm by a secondary test, and on low volume, and a small up wave. So based on price and volume, you have indication of weakness after the climax. There was some selling here, which took out 1, 2, 3, 4, which increased in selling pressure. And then it broke with breakouts, where you see BO and BO over here. Those are breakouts. So this is a story, and this story is makes you confident that yes, this is distribution, and on this lower low where mark as confirmation, the chances are it's going to go down. Just like here, where you have climax followed by the testing process with cause, then a breakout. You know, all of that together, what went on here with the climax and the secondary tests and the breakouts right here and a breakout right here with follow through here with the biggest wave in I think 49 waves, etc., that is speaking that we're going to go higher. Okay, so it's not just waves up and down, it's not just cause, it's what the story is unfolding. You know, I don't really like talking about the schematic, but there's certain things in the schematic that must be understood. I mean, one is the climax, second is a change of behavior, third is also that secondary test that comes after the climax, fourth is probably a breakout, fifth is cause, sixth is the low volume testing or the feathers weight or whatever you want to call it that other people have said, or they call it LPS, LPSY. Those are things that are really important. Other things like phase A, B, C, D, whatever, it is going to drive you nuts. So you just need to know from a behavior perspective, what are the key behaviors that create trend? What are the key behaviors that end trend? What are the key behaviors that start trend? Here, what are the key behaviors that end trend? A climax, a secondary test, low volume testing, a spring, followed by a higher high, followed by a test and a higher high, followed by the breakout. So all of that is, you know, needs to be in the head, in the mind, so you automatically know what to look for. Because all of this thing, all of these behaviors just point to one conclusion: demand has overtaken supply. When demand overtakes supply, you go up. When supply overtakes demand, you go down. So here, what is the evidence is the supply overtook demand? The climax, the low volume, the heavy volume selling, more selling, the breakdown, takes out 1, 2, 3, 4, 5 lows, has confirmation lower low. All of that is telling you, hey, supply has overcome demand, and to look for shorts. Now, in strong trends though, you have to be careful because supply can, oh shit, what the hell's going on? Supply can overtake demand and then find demand at lower whatever and go right back up. So you have to know the background in the higher time frame, or else it's not going to work. Alright, just a tip. Anyway, so that's the lesson. If you want to understand this, there's a couple of webinars done by David Weiss. One is on Big Mike. One is on Big Mike Trading on YouTube, and the other is by done on hosted by Linda Bradford Rashke and David Weiss. Well, he does the webinar, but he does it for her, and it's on YouTube and it's also on Vimeo. You can also go to our site, and there's a link there that covers Renko with what I'm doing here. So just pay attention to what's being explained there. Like, keep watching it over and over again. You get all of this is covered. Alright, so the second point I want to mention, the key behaviors you must be as a Wyckoff trader. As a Wyckoff trader, I'll explain what you need to do. First, from a behavior perspective, oh shit. Whatever. Behavior perspective, I'll just talk it out. So behavior, you have to know climaxes, change of behavior, secondary test, the LPS or LPSY, which is nothing more than low volume or very small wave, or low volume wave after the sinus strength or sinus weakness. And the conformation, and then after that is just looking for all of this change, that creates a turning point at key levels. What are the key levels? Breakouts as well as pivots. That's all. The other stuff is there, but like point and figure, but I think it'll be way too much to do it intraday, because it's just too much pressure to count boxes and project and all of that. So you don't really need to do point and figure intraday, although some people do it. I can do it, but I can also do it off of this, because you see one column up, one column down, another column up, another column down, so you can kind of count this. And I had come up with a method to project off of these types of charts, but it's just easier if you have like a easier click 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 methodology, and it doesn't really make that much of a difference. Anyway, so I've explained the process by which demand overtook supply and supply overtook demand. And that's all you get. Bye.